Question 1. The assessment process reveals that the finance department is experiencing significant delays in its monthly close due to manual reconciliation efforts required to identify and correct discrepancies in financial data imported into IBM Cognos controller from disparate operational systems. The development team is tasked with improving this process. Which of the following approaches best addresses the underlying data integrity issues and aligns with best practices for financial reporting system development? Option A. Increase the frequency of manual data audits performed by the finance team after data has been fully imported into IBM Cognos controller, relying on their expertise to identify and rectify any anomalies. Option B. Advise the operational system owners to enhance their data entry training programs, assuming that improved user input will inherently resolve data quality issues before data reaches Cognos controller. Option C. Implement automated data validation rules within IBM Cognos controller to flag and prevent the import of data that does not meet predefined financial and structural criteria, coupled with a documented data governance policy outlining data ownership and correction procedures. Option D. Develop custom reports within IBM Cognos controller that highlight potential data anomalies based on statistical outliers, leaving the final determination and correction of these anomalies to the end users without specific predefined validation criteria. Correct answer is C. Implement automated data validation rules within IBM Cognos controller to flag and prevent the import of data that does not meet predefined financial and structural criteria, coupled with a documented data governance policy outlining data ownership and correction procedures. Explanation. The assessment process reveals a common challenge in enterprise reporting, ensuring data integrity and consistency across different reporting tools and business units. In the context of IBM Cognos 10 controller developer, this often involves managing data sourced from various systems, each with its own validation rules and data entry practices. The professional challenge lies in balancing the need for timely and accessible financial information with the imperative to maintain accuracy and compliance with internal policies and external reporting standards. Stakeholders, including finance teams, auditors, and executive management, rely on the integrity of the data presented. Any compromise in data quality can lead to misinformed decisions, regulatory scrutiny, and reputational damage. The correct approach, focusing on establishing robust data validation rules within IBM Cognos controller and implementing a clear data governance framework, represents best professional practice. This aligns with the principles of data stewardship and ensures that data is accurate, complete, and consistent before it is used for reporting. By embedding validation at the source or during the import process, the system actively prevents erroneous data from propagating. This proactive stance is crucial for maintaining trust in the financial reporting process and adhering to the implicit regulatory expectation of reliable financial data. Incorrect approaches, such as relying solely on end-user manual checks or assuming data accuracy from source systems without verification, present significant regulatory and ethical failures. Manual checks are prone to human error and are not scalable for large datasets, failing to meet the standard of due diligence expected in financial reporting. Assuming source system accuracy without independent validation ignores the potential for data transformation errors or inconsistencies introduced during integration, which can lead to material misstatements. This failure to implement adequate controls can be seen as a breach of professional responsibility, potentially violating principles of accuracy and reliability expected by regulatory bodies overseeing financial reporting. The professional decision-making process for similar situations should involve a risk-based approach. First, identify all potential data sources and the processes involved in data aggregation and reporting. Second, assess the inherent risks associated with each data source and process, considering the potential impact of data inaccuracy. Third, design and implement controls, including automated validation rules within Cognos controller and clear data governance policies, to mitigate identified risks. Finally, establish a process for ongoing monitoring and auditing of data quality to ensure continued compliance and accuracy. Question 2. Governance review demonstrates that the current IBM Cognos 10 controller system, critical for financial reporting, is approaching its end of life. The development team is tasked with planning the migration to a new financial reporting solution, considering the need for uninterrupted and accurate financial data, which migration strategy best aligns with regulatory expectations for financial system stability and data integrity. Option A. Implement a phased migration, starting with core reporting modules and gradually migrating other functionalities, with thorough testing at each stage. Option B. Prioritize the implementation of advanced analytical features in the new system during the initial migration phase, deferring core reporting module updates. Option C. Defer the migration indefinitely and continue to rely on existing workarounds and manual data adjustments to manage the legacy system's limitations. Option D. Execute a Big Bang migration, switching all modules from the old system to the new one simultaneously to minimize the transition period. The correct answer is A. Implement a phased migration, starting with core reporting modules and gradually migrating other functionalities, with thorough testing at each stage. Explanation: scenario analysis. This scenario presents a common challenge in financial reporting and system development, where a critical business process relies on a legacy system that is nearing its end of life. The challenge lies in balancing the immediate need for accurate and timely financial data with the long-term strategic imperative of system modernization. The developer must navigate potential data integrity risks, user resistance to change, and the financial implications of both maintaining the old system and implementing a new one, all while adhering to regulatory compliance. Correct approach analysis. The correct approach prioritizes a phased migration strategy. This represents best professional practice because it minimizes disruption to ongoing financial operations and allows for iterative testing and validation of the new system's functionality and data integrity. By migrating core modules first, the development team can address the most critical reporting requirements and gain user confidence before tackling more complex areas. This aligns with regulatory expectations for robust internal controls and accurate financial reporting, as it ensures that data is migrated and processed correctly throughout the transition. It also allows for more manageable allocation of resources and risk mitigation. Incorrect approaches analysis. One incorrect approach involves a Big Bang migration, where all modules are switched over simultaneously. This is professionally unacceptable because it introduces a high risk of widespread system failure, data corruption, and significant disruption to financial reporting cycles. Regulators expect systems to be reliable and data to be accurate. A sudden, large-scale failure could lead to non-compliance with reporting deadlines and potentially inaccurate financial statements, triggering regulatory scrutiny. Another incorrect approach is to delay the migration indefinitely, relying on workarounds and manual processes. This is ethically and regulatorily unsound. It increases the risk of human error in data manipulation, compromises data integrity, and can lead to inefficiencies that impact the accuracy and timeliness of financial reporting. Furthermore, it demonstrates a lack of proactive risk management, which is a key tenet of good governance and regulatory compliance. A third incorrect approach is to prioritize the new system's advanced features over core reporting functionality during the initial migration. This is a failure of professional judgment. While innovation is important, the primary purpose of financial systems is to generate accurate and compliant financial reports. Neglecting core reporting needs in favor of secondary features jeopardizes the fundamental integrity of financial data and can lead to immediate compliance issues. Professional reasoning. Professionals should adopt a risk-based, phased approach to system migration. This involves a thorough assessment of current system vulnerabilities, business impact, and regulatory requirements. Key stakeholders, including finance, IT, and compliance teams, must be involved in the planning and execution. The decision-making process should prioritize data integrity, operational continuity, and regulatory compliance at every stage. Regular communication, comprehensive testing, and contingency planning are essential to mitigate risks and ensure a successful transition. Question 3. Risk assessment procedures indicate that a new custom reporting feature developed for IBM Cognos 10 controller has the potential to significantly alter data aggregation logic. Which of the following approaches best ensures that this change is implemented responsibly and in compliance with financial reporting standards? Option A. Conduct a comprehensive impact assessment involving technical, functional, and business stakeholders, documenting potential risks, mitigation strategies, and a rollback plan before deployment. Option B. Implement the feature and monitor system performance for any immediate issues, addressing them as they arise. Option C. Deploy the feature to a limited group of users for initial feedback, assuming that any broader issues will be manageable. Option D. Proceed with the deployment of the new feature immediately, as the developer has thoroughly tested the code and is confident in its accuracy. The correct answer is A. Conduct a comprehensive impact assessment involving technical, functional, and business stakeholders, documenting potential risks, mitigation strategies, and a rollback plan before deployment. Explanation. Scenario analysis. This scenario presents a professional challenge because the implementation of a new reporting feature in IBM Cognos 10 controller directly impacts the accuracy and timeliness of financial data, which is critical for regulatory compliance and business decision-making. The developer must balance the desire for enhanced functionality with the inherent risks of introducing changes into a production environment. The challenge lies in anticipating potential negative consequences, such as data corruption, performance degradation, or incorrect financial reporting, and proactively mitigating them. A thorough impact assessment is crucial to ensure that the benefits of the new feature outweigh the risks and that all stakeholders are aware of and prepared for any potential disruptions. Correct approach analysis. The correct approach involves a systematic and comprehensive impact assessment that considers all potential ramifications of the new reporting feature. This includes evaluating the technical feasibility, the potential effect on existing data integrity, performance implications for the controller system, and the user experience. Crucially, it necessitates engaging with key stakeholders, such as finance users, IT administrators, and compliance officers, to gather their input and validate assumptions. Documenting the assessment findings, proposed mitigation strategies, and a rollback plan is essential for demonstrating due diligence and adherence to best practices in system development and deployment. This approach aligns with the principles of responsible system development, ensuring that changes are made in a controlled and predictable manner, thereby minimizing risk to the organization's financial reporting and operational stability. Incorrect approaches analysis. Implementing the new reporting feature without a formal impact assessment is a significant regulatory and ethical failure. It demonstrates a disregard for potential risks, which could lead to inaccurate financial reporting, a direct violation of financial regulations that mandate accurate and reliable financial statements. This approach also fails to consider the potential for system instability or data corruption, which could have severe operational and financial consequences for the organization. Deploying the feature solely based on the developer's personal confidence in its functionality, without validation from other departments or a thorough risk analysis, is another critical failure. This approach neglects the interconnectedness of financial systems and the diverse needs of various user groups. It can lead to unforeseen issues that impact other business processes or compliance requirements that the developer may not be aware of. Ethically, it represents a lack of professional responsibility to ensure the solution meets broader organizational needs and standards. Focusing only on the technical aspects of the new feature and ignoring its potential impact on end users and business processes is also a flawed approach. While technical correctness is important, the ultimate purpose of the feature is to serve business needs. Neglecting user impact can lead to adoption issues, user frustration, and ultimately, the failure of the feature to deliver its intended value, potentially leading to workarounds that introduce further risks and compliance issues. Professional reasoning. Professionals should adopt a structured, risk-based approach to system changes. This involves 1. Identifying the change and its intended benefits. 2. Brainstorming potential risks and impacts across technical, operational, and business domains. 3. Assessing the likelihood and severity of each identified risk. 4. Developing mitigation strategies for high-priority risks. 5. Documenting the entire process, including assumptions, findings, and mitigation plans. 6. Obtaining stakeholder buy-in and approval before proceeding with implementation. 7. Planning for testing, deployment, and post-implementation monitoring. 8. Establishing a clear rollback strategy in case of unforeseen issues. This systematic process ensures that changes are implemented responsibly, minimizing disruption and maintaining the integrity of financial data and reporting. Question 4. Operational review demonstrates that a key financial performance indicator in a generated IBM Cognos 10 controller report is consistently showing a lower value than expected, despite the underlying source data appearing to be correct. The report utilizes several custom calculations defined within the controller application to aggregate and transform financial data. The development team has been tasked with identifying the root cause of this discrepancy and implementing a solution. Which of the following approaches is the most professionally sound and compliant with best practices for financial data integrity? Option A. Focus on re-educating the end users on how to interpret the report, assuming their understanding of the financial performance indicator is the primary source of the perceived discrepancy. Option B. Manually adjust the values within the report output to align with the expected figures, without investigating the underlying data or calculation logic, to meet immediate reporting deadlines. Option C. Immediately escalate the issue to IBM support, assuming a potential defect in the core IBM Cognos 10 controller software that is causing the miscalculation. Option D. Thoroughly examine the report definition and trace the data flow through the IBM Cognos 10 controller model, paying close attention to the logic of the custom calculations and any dimension mappings that might be affecting the aggregation of the specific financial performance indicator. The correct answer is D. Thoroughly examine the report definition and trace the data flow through the IBM Cognos 10 controller model, paying close attention to the logic of the custom calculations and any dimension mappings that might be affecting the aggregation of the specific financial performance indicator. Explanation. Scenario analysis. This scenario presents a professional challenge related to data integrity and reporting accuracy within IBM Cognos 10 controller. The core difficulty lies in ensuring that the financial data, as presented in reports, accurately reflects the underlying transactional data and adheres to the defined business logic and regulatory requirements. Misinterpretations or incorrect configurations in the data model or reporting structures can lead to significant financial misstatements, impacting stakeholder confidence and potentially leading to regulatory scrutiny. The developer must navigate the complexities of the controller data model, the impact of user-defined calculations, and the nuances of report generation to identify and rectify the root cause of the discrepancy. Correct approach analysis. The correct approach involves a systematic and detailed investigation of the data flow and calculation logic within IBM Cognos 10 controller. This begins with validating the source data to ensure its accuracy and completeness. Subsequently, the focus shifts to examining the specific reporting question, tracing the data elements back through the controller model, including any custom calculations or business rules applied. This methodical approach ensures that the discrepancy is pinpointed to its origin, whether it's a data input error, a misconfigured calculation, an incorrect dimension mapping, or a flaw in the report definition itself. This aligns with professional best practices of data governance and financial reporting integrity, emphasizing accuracy, transparency, and auditability. Adherence to these principles is paramount in financial systems to maintain trust and comply with reporting standards. Incorrect approaches analysis. One incorrect approach is to immediately assume a system-wide bug or a failure in the core IBM Cognos 10 controller software without thorough investigation. This bypasses the critical step of verifying user configurations, data inputs, and report definitions, which are far more common sources of reporting discrepancies. Such an assumption can lead to unnecessary escalations, wasted resources, and a failure to address the actual problem, potentially resulting in continued inaccurate reporting. This approach demonstrates a lack of due diligence and a failure to follow a structured problem-solving methodology, which is a regulatory and ethical concern in financial reporting environments where accuracy is paramount. Another incorrect approach is to adjust the report output to match the perceived desired outcome without understanding the underlying data or calculation logic. This is a form of data manipulation that masks the true issue and creates a report that is factually inaccurate, even if it appears to align with expectations. This directly violates principles of financial integrity and can lead to severe regulatory penalties if discovered during an audit. It represents a failure to uphold professional standards of accuracy and honesty in financial reporting. A further incorrect approach is to focus solely on the end user's interpretation of the report, without validating the data and logic that generated it. While user understanding is important, the primary responsibility lies in ensuring the report's accuracy. Ignoring the technical and logical underpinnings of the report to solely address user perception is a superficial fix that does not resolve the root cause of the discrepancy and can perpetuate errors. This demonstrates a lack of accountability for the accuracy of the system's output. Professional reasoning. Professionals facing such a discrepancy should employ a structured analytical process. This involves 1. Clearly defining the problem by documenting the observed discrepancy and the expected outcome. 2. Gathering all relevant information, including source data, report definitions, and any custom logic applied within IBM Cognos 10 controller. 3. Developing hypotheses about the potential causes of the discrepancy. 4. Systematically testing these hypotheses by tracing data flow, validating calculations, and reviewing configurations. 5. Implementing the identified solution and thoroughly testing the fix to ensure the discrepancy is resolved and no new issues are introduced. 6. Documenting the entire process, findings, and resolution for auditability and future reference. This systematic approach ensures accuracy, compliance, and maintains professional integrity. Question 5. Quality control measures reveal that a significant number of financial entries in the IBM Cognos 10 controller system are consistently failing reconciliation checks due to minor formatting inconsistencies in the source data. These inconsistencies are not inherently incorrect from a business logic perspective, but prevent automated validation rules from passing. The finance team is under pressure to close the reporting period quickly. What is the most appropriate course of action to ensure data integrity and compliance while addressing the reporting deadline? Option A. Escalate the issue to the IT department to request a complete overhaul of the data import process, which may take an extended period, and inform stakeholders that the reporting deadline will be missed. Option B. Temporarily disable the specific validation rules that are being triggered by the formatting inconsistencies to allow the data to be loaded and reported on time, with a plan to address the underlying data source issues later. Option C. Manually review and correct each individual data entry that fails validation, prioritizing those that are critical for the current reporting period, and deferring a broader investigation into the source data formatting issues. Option D. Reconfigure the validation rules within IBM Cognos 10 controller to accommodate the identified formatting variations, ensuring that data is validated against a more flexible, yet still compliant, set of criteria. The correct answer is D. Reconfigure the validation rules within IBM Cognos 10 controller to accommodate the identified formatting variations, ensuring that data is validated against a more flexible, yet still compliant, set of criteria. Explanation. The scenario presents a common challenge in financial reporting and data management, ensuring the integrity and accuracy of financial data within a system like IBM Cognos 10 controller. The professional challenge lies in balancing the need for timely reporting with the imperative to maintain data accuracy and adhere to regulatory compliance. Mismanagement of data validation rules can lead to significant financial misstatements, regulatory penalties, and erosion of stakeholder trust. Careful judgment is required to identify the root cause of discrepancies and implement effective, compliant solutions. The correct approach represents best professional practice because it directly addresses the identified data integrity issue by leveraging the system's built-in validation capabilities. Implementing specific validation rules within IBM Cognos 10 controller ensures that data conforms to predefined business logic and accounting principles before it is finalized or reported. This proactive measure aligns with regulatory expectations for accurate financial reporting, such as those mandated by financial accounting standards and internal control frameworks, e.g., Sarbanes-Oxley Act if applicable to the jurisdiction, though for this exam we focus on the principles inherent in robust financial systems. By enforcing these rules at the data entry or import stage, the system acts as a gatekeeper, preventing erroneous data from propagating through the reporting cycle. This systematic approach minimizes the risk of material misstatements and demonstrates a commitment to data governance and compliance. An incorrect approach that involves manually correcting data without investigating the underlying cause of the discrepancies is professionally unacceptable. This fails to address the systemic issue, making it likely that similar errors will recur. From a regulatory perspective, this can be seen as a failure of internal controls, potentially violating principles of accurate record-keeping and financial reporting. It suggests a reactive rather than proactive approach to data quality, which is often scrutinized during audits. Another incorrect approach, such as disabling validation rules to expedite data loading, is also professionally unacceptable and carries significant regulatory risk. This action directly undermines the integrity of the financial data. It bypasses essential checks and balances designed to ensure accuracy and compliance. Such a practice would likely be viewed as a severe breach of internal controls and could lead to substantial penalties if discovered during a regulatory review or audit. It prioritizes speed over accuracy and compliance, a dangerous trade-off in financial data management. The professional reasoning process for similar situations should involve a structured approach. 1. Identify and document the discrepancy. 2. Investigate the root cause of the discrepancy, examining data sources, input processes, and system configurations. 3. Assess the impact of the discrepancy on financial reporting and compliance. 4. Determine the most appropriate solution, prioritizing methods that enhance data integrity and adhere to regulatory requirements. 5. Implement the solution, ensuring proper testing and validation. 6. Document the resolution and any changes made to processes or system configurations. 7. Monitor for recurrence of the issue. Question 6. What factors determine the scope and depth of an impact assessment when introducing a new custom report generation feature in IBM Cognos 10 controller, considering potential effects on existing financial data models and user access permissions? Option A. The availability of pre-built templates within IBM Cognos 10 controller and the general user satisfaction with the current reporting environment. Option B. The complexity of the new report's data sources, the number of existing reports that might be affected, and the criticality of the financial data being reported. Option C. The personal technical expertise of the developer implementing the feature and the perceived urgency of the business request. Option D. The cost of additional hardware required to support the new feature and the time allocated for the development sprint. The correct answer is B. The complexity of the new report's data sources, the number of existing reports that might be affected, and the criticality of the financial data being reported. Explanation. This scenario presents a professional challenge because the implementation of a new reporting feature in IBM Cognos 10 controller requires a thorough impact assessment to ensure compliance with data integrity and reporting accuracy standards, which are implicitly governed by the principles of sound financial reporting and data governance expected within any regulated financial environment, even if specific UK/SISI regulations are not explicitly detailed in the exam syllabus for this particular question. The developer must anticipate how changes might affect existing reports, data models, and user access, thereby preventing potential misstatements or operational disruption. The correct approach represents best professional practice because it prioritizes a systematic and comprehensive evaluation of the proposed changes. This involves identifying all potential downstream effects on data, reports, and user workflows. By engaging stakeholders and conducting thorough testing, the developer ensures that the new feature integrates seamlessly, maintains data accuracy, and meets business requirements without introducing new risks or compromising existing controls. This aligns with the professional obligation to deliver reliable and accurate financial information, a cornerstone of regulatory compliance and ethical conduct in financial reporting. An incorrect approach that focuses solely on the technical implementation without considering the broader business and data implications would be professionally unacceptable. This failure would violate the implicit ethical duty to ensure that financial reporting systems produce accurate and reliable data. Specifically, neglecting to assess the impact on existing reports could lead to data discrepancies or the generation of misleading financial statements, which could have regulatory consequences if these reports are used for compliance purposes. Another incorrect approach, such as proceeding with implementation without adequate testing, risks introducing errors that could compromise data integrity and lead to non-compliance with internal data governance policies and potentially external reporting standards. This demonstrates a lack of due diligence and professional responsibility. Professionals should adopt a decision-making framework that begins with understanding the business context and regulatory expectations, even if implicit. This is followed by a structured impact assessment process that includes identifying all affected components, consulting with relevant stakeholders, e.g., finance, IT, end users, documenting potential risks and mitigation strategies, and implementing a robust testing plan before deployment. This iterative process ensures that changes are managed effectively and that the integrity of financial data and reporting is maintained. Question 7. The assessment process reveals that a critical financial performance report, due to stakeholders by end of day, is showing an anomaly in a key revenue metric. The IBM Cognos 10 controller developer has identified a potential data input error from a source system, but correcting this at the source will take longer than the reporting deadline. The developer is under pressure to deliver the report on time. What is the most professionally responsible course of action? Option A. Manually adjust the revenue figures directly within the report output file after generation to match the expected values, without altering the underlying data in IBM Cognos controller. Option B. Proceed with generating the report using the current, albeit anomalous data, and provide a separate addendum explaining the discrepancy and the plan to rectify it. Option C. Immediately implement a temporary data correction within the IBM Cognos controller application to align the report with expected figures, documenting the change, and initiating a separate process to address the source system error. Option D. Refuse to generate the report until the source system data error is fully resolved and validated, even if it means missing the deadline. The correct answer is C. Immediately implement a temporary data correction within the IBM Cognos controller application to align the report with expected figures, documenting the change and initiating a separate process to address the source system error. Explanation. Scenario analysis. This scenario presents a common challenge in data governance and reporting, where a developer must balance the need for timely and accurate financial reporting with the integrity of the data and adherence to established development processes. The pressure to deliver a report quickly can lead to shortcuts that compromise data quality and auditability, creating a professional dilemma. The developer must exercise sound judgment to ensure compliance with internal policies and potentially external regulatory requirements for financial data accuracy. Correct approach analysis. The correct approach prioritizes data validation and adherence to the established change management process. This aligns with best professional practices for financial reporting systems, which demand accuracy, traceability, and control. By performing thorough testing and seeking proper authorization for changes, the developer upholds the integrity of the financial data, ensures the report's reliability, and maintains compliance with internal controls designed to prevent errors and fraud. This methodical approach safeguards against misstatements and supports auditability. Incorrect approach is analysis. One incorrect approach involves directly modifying the report definition without proper testing or authorization. This bypasses crucial validation steps, increasing the risk of introducing errors into the financial report. Ethically, this demonstrates a disregard for established procedures and a potential for misrepresentation of financial data. It also fails to meet the implicit requirement of producing reliable financial information, which could have regulatory implications if the data is used for external reporting. Another incorrect approach is to manually adjust the data outside of the IBM Cognos controller system to achieve the desired report output. This is a significant ethical and regulatory failure. It creates a disconnect between the system of record and the reported figures, making the report untrustworthy and difficult to audit. Such manual manipulation can be construed as an attempt to obscure or misrepresent financial performance, violating principles of transparency and accuracy fundamental to financial reporting. A third incorrect approach is to defer the issue and deliver a report that is known to be inaccurate, with the intention of fixing it later. This is professionally irresponsible and ethically unsound. Financial reports are relied upon by stakeholders for decision-making. Delivering a known inaccurate report, even with a promise of future correction, erodes trust and can lead to poor business decisions based on flawed information. It also fails to meet the immediate requirement for accurate reporting and may violate internal policies regarding report submission. Professional reasoning. When faced with a discrepancy or a request for a rapid report modification, a professional developer should first understand the root cause of the issue. This involves investigating the data, the report logic, and any recent system changes. If a data issue is identified, the priority is to correct the data at its source or through approved data correction processes, not to mask it in the report. If a report logic issue is identified, the developer must follow the established change control procedures, which typically include impact analysis, testing, and formal approval before deploying any changes. This systematic approach ensures that all modifications are documented, validated, and contribute to the overall integrity and reliability of the financial reporting system. Question 8. System analysis indicates a discrepancy between the consolidated financial figures displayed in IBM Cognos controller and those reported by a separate operational reporting system. The controller's department relies on Cognos controller for statutory reporting and internal analysis, and the figures in the operational system are used for departmental performance tracking. The developer has been tasked with resolving this inconsistency. Which of the following approaches best addresses this situation while upholding data integrity and regulatory compliance? Option A. Immediately adjust the data within Cognos controller to match the figures from the operational reporting system, assuming the operational system's data is the definitive source. Option B. Instruct the controller's department to manually reconcile the differences each reporting period, as the operational system is considered the primary source of truth for all financial figures. Option C. Focus solely on modifying the report queries in Cognos BI to display figures that align with the operational system, without investigating the underlying data in Cognos controller. Option D. Conduct a detailed audit of the data import and consolidation processes within IBM Cognos controller, verifying data source connections, mapping rules, and the integrity of the data loaded from source systems. Simultaneously, review the specific report definitions in Cognos BI to ensure they accurately reflect the intended financial data from controller. The correct answer is D. Conduct a detailed audit of the data import and consolidation processes within IBM Cognos controller, verifying data source connections, mapping rules, and the integrity of the data loaded from source systems. Simultaneously, review the specific report definitions in Cognos BI to ensure they accurately reflect the intended financial data from controller. Explanation. Scenario analysis. This scenario presents a common challenge in financial reporting and data management within an enterprise environment. The core difficulty lies in ensuring data integrity and consistency across different reporting tools and systems, especially when dealing with complex financial structures and regulatory compliance requirements. The developer must balance the need for efficient data retrieval and reporting with the imperative to maintain accurate and auditable financial data. Mismanagement of data sources or reporting logic can lead to significant compliance risks, misstated financial reports, and potential regulatory penalties. The professional challenge is to identify the root cause of the discrepancy and implement a sustainable solution that appends data accuracy and meets the specific needs of the controller's department. Correct approach analysis. The correct approach involves a systematic investigation of the data flow and transformation processes within IBM Cognos controller and its integration points. This includes verifying the data source configurations in Cognos controller, ensuring that the correct tables and fields are being referenced, and validating the data mapping and transformation rules applied during the import or consolidation process. Furthermore, it requires examining the specific report definitions in Cognos BI to confirm that they are accurately querying the data as intended by the controller's department. This methodical approach ensures that the discrepancy is addressed at its source, leading to a reliable and accurate reporting solution that adheres to financial data integrity principles and regulatory expectations for financial reporting. Incorrect approaches analysis. One incorrect approach would be to simply adjust the report output in Cognos BI to match the figures from the other system without investigating the underlying data discrepancy. This is professionally unacceptable because it masks a potential data integrity issue within Cognos controller or its data sources. It fails to address the root cause, leading to continued inaccuracies and a lack of trust in the financial data. From a regulatory perspective, this approach violates principles of accurate financial record keeping and can lead to misstatements that have compliance implications. Another incorrect approach would be to assume the other system's data is inherently correct and to force Cognos controller to replicate those figures without understanding the data capture and consolidation logic within controller. This bypasses the established financial consolidation processes managed by Cognos controller, which are designed to adhere to specific accounting standards and internal controls. It risks introducing errors into the consolidated financial statements and undermines the audit trail. Ethically, It compromises the integrity of the financial reporting process. A third incorrect approach would be to blame the end users for misinterpreting the data without conducting a thorough technical investigation. While user error can occur, a professional developer must first exhaust all technical possibilities. This approach abdicates responsibility for ensuring the system's accuracy and can lead to user frustration and a breakdown in communication. It fails to uphold the professional obligation to provide a reliable reporting tool. Professional reasoning. Professionals should adopt a structured problem-solving methodology. This begins with clearly defining the problem and its impact. Next, gather all relevant information, including system configurations, data sources, report definitions, and user feedback. Formulate hypotheses about the potential causes of the discrepancy. Test these hypotheses systematically, starting with the most likely technical causes. Document all findings and actions taken. When a discrepancy is identified, prioritize addressing the root cause to ensure data integrity and compliance. If the investigation reveals a systemic issue, implement a robust solution and communicate findings and resolutions to stakeholders. This process ensures accountability, promotes continuous improvement, and upholds the highest professional and ethical standards in financial data management. Question 9. Benchmark analysis indicates that a key challenge in developing IBM Cognos 10 controller solutions involves ensuring that financial reports, while comprehensive, do not inadvertently expose sensitive or personally identifiable information. Which of the following development strategies best addresses this regulatory compliance concern? Option A. Implementing robust data anonymization and pseudonymization techniques within the Cognos controller data model and report design. Option B. Excluding all potentially sensitive financial data from the Cognos controller system to eliminate privacy risks. Option C. Assuming that all financial data within Cognos controller is inherently non-sensitive and requires no specialized privacy handling. Option D. Relying solely on standard user access controls configured within the Cognos controller application to restrict report visibility. The correct answer is A. Implementing robust data anonymization and pseudonymization techniques within the Cognos controller data model and report design. Explanation. Scenario analysis. This scenario presents a professional challenge related to data privacy and regulatory compliance within the context of IBM Cognos 10 controller development. Core difficulty lies in balancing the need for comprehensive financial reporting and analysis with the strict requirements of data protection regulations. Developers must ensure that sensitive financial data, which may include personally identifiable information, PI, or commercially sensitive details, is handled, stored, and accessed in a manner that strictly adheres to the governing regulatory framework. Failure to do so can lead to significant legal penalties, reputational damage, and loss of client trust. The complexity arises from the interconnectedness of data within the controller system and the potential for unintended data exposure through reporting or access controls. Correct approach analysis. The correct approach involves implementing robust data anonymization and pseudonymization techniques within the IBM Cognos 10 controller development process. This aligns with the principles of data minimization and privacy by design, which are fundamental to many data protection regulations. By transforming sensitive data into a format where individuals cannot be directly identified, while still retaining its analytical value for financial reporting, developers ensure compliance. This approach demonstrates a proactive commitment to safeguarding sensitive information, reducing the risk of data breaches, and maintaining the integrity of the financial data used for reporting. It reflects best professional practice by prioritizing regulatory adherence and ethical data handling throughout the development lifecycle. Incorrect approaches analysis. One incorrect approach involves relying solely on standard user access controls within Cognos controller to protect sensitive financial data. While access controls are a necessary component of security, they are insufficient on their own to meet stringent data privacy regulations. This approach fails to address the inherent risk of data exposure if access controls are misconfigured, bypassed, or if data is inadvertently included in reports accessible to a broader audience than intended. It represents a regulatory failure by not implementing sufficient technical and organizational measures to protect personal or sensitive data, potentially violating principles of data protection by design and default. Another incorrect approach is to exclude sensitive financial data entirely from reporting and analysis within Cognos controller. While this might seem like a way to avoid data privacy issues, it fundamentally undermines the purpose of a financial reporting system. This approach leads to incomplete or inaccurate financial insights, hindering effective business decision-making. It is professionally unacceptable as it fails to deliver the core functionality expected of the system and does not represent a compliant solution, but rather an avoidance of the problem that renders the system ineffective. A third incorrect approach is to assume that all data within the Cognos controller system is inherently non-sensitive and therefore requires no special handling beyond basic security. This is a critical regulatory and ethical failure. Financial data, especially in a corporate context, can easily contain information that is considered sensitive or personal under various regulations. This assumption demonstrates a lack of due diligence and a disregard for the potential impact of data mishandling, leading to non-compliance and significant risk. Professional reasoning. Professionals developing with IBM Cognos 10 controller must adopt a risk-based approach to data handling. This involves understanding the types of data being processed, identifying potential privacy risks, and implementing appropriate controls. The decision-making process should prioritize regulatory requirements, such as data minimization, purpose limitation, and security. When faced with the need to report on sensitive data, the professional should first explore technical solutions for anonymization or pseudonymization that preserve analytical utility. If such solutions are not feasible or sufficient, a thorough risk assessment should be conducted, and additional compensating controls, such as strict access limitations and data usage agreements, should be implemented. Continuous monitoring and regular reviews of data handling practices are essential to ensure ongoing compliance and adapt to evolving regulatory landscapes. Question 10. Risk assessment procedures indicate that a critical financial reporting process within IBM Cognos 10 controller is susceptible to potential data integrity issues. Which of the following actions best addresses this risk? Option A. Implement a broad set of security patches across the entire Cognos 10 controller environment without a specific analysis of the affected process. Option B. Rely on the experience of senior developers to identify the most probable risks based on their general knowledge of financial systems. Option C. Conduct a comprehensive review of system logs and user access controls, cross-referencing with business process documentation to identify specific points of potential data manipulation or error. Option D. Focus solely on identifying potential technical bugs in the Cognos 10 controller software code related to the specific reporting function. The correct answer is C. Conduct a comprehensive review of system logs and user access controls, cross-referencing with business process documentation to identify specific points of potential data manipulation or error. Explanation. This scenario presents a professional challenge due to the inherent subjectivity in assessing the likelihood and impact of risks within a complex financial reporting system like IBM Cognos 10 controller. The developer must balance the need for thorough risk identification with the practical constraints of project timelines and resources. The core difficulty lies in moving beyond superficial identification to a nuanced understanding of how specific system configurations and user behaviors translate into tangible financial reporting risks. The correct approach represents best professional practice because it involves a systematic and documented process of identifying, analyzing, and prioritizing risks based on their potential impact on the integrity and accuracy of financial data. This aligns with general principles of good governance and internal control, which are implicitly expected in the development of financial systems. By engaging stakeholders and using a structured methodology, the developer ensures that the risk assessment is comprehensive, relevant, and actionable, leading to the implementation of appropriate mitigating controls. This proactive stance is crucial for preventing financial misstatements and maintaining stakeholder confidence. An incorrect approach that focuses solely on technical vulnerabilities without considering the business context or user error fails to address the full spectrum of risks. This is a regulatory failure because it neglects the requirement for systems to be designed and maintained in a way that supports accurate financial reporting, which is a fundamental expectation under financial regulations. Another incorrect approach that relies on anecdotal evidence or personal opinion rather than a structured assessment is ethically problematic. It demonstrates a lack of due diligence and professional skepticism, potentially leading to overlooked risks that could have significant financial consequences. This can be seen as a failure to uphold professional standards of care. A third incorrect approach that prioritizes speed over thoroughness, leading to a superficial risk assessment, is also a failure. It suggests a disregard for the potential impact of errors and misstatements, which can have severe legal and reputational repercussions for the organization. The professional decision-making process for similar situations should involve a phased approach. First, clearly define the scope of the risk assessment, identifying key financial reporting processes and data flows within Cognos 10 Controller. Second, employ a variety of risk identification techniques, including workshops with business users, review of past incidents, and analysis of system configurations. Third, develop a clear framework for evaluating the likelihood and impact of identified risks, using a consistent scoring mechanism. Fourth, prioritize risks based on their severity and potential impact, focusing mitigation efforts on the most critical areas. Finally, document the entire process, including identified risks, their assessment, and the planned mitigation strategies, ensuring transparency and accountability. Question 11. Assessment of the risk mitigation strategies implemented within an IBM Cognos 10 controller environment for the upcoming financial reporting cycle, considering the potential impact of system vulnerabilities on data integrity and regulatory compliance. Option A. Focus on optimizing the performance and speed of data retrieval and report generation within Cognos 10 Controller, assuming that technical efficiency inherently implies data accuracy and security. Option B. Prioritize the implementation of all user-requested enhancements and new report functionalities for Cognos 10 Controller, deferring any in-depth risk assessment until after the current reporting cycle is completed. Option C. Implement a comprehensive, documented risk assessment process that identifies potential data integrity and security risks within the Cognos 10 controller system, analyzes their impact on financial reporting, and defines specific control measures to mitigate these risks, with regular reviews and updates. Option D. Rely on the existing knowledge and experience of the development team to address any perceived risks, without formal documentation or a structured risk assessment methodology. The correct answer is C. Implement a comprehensive, documented risk assessment process that identifies potential data integrity and security risks within the Cognos 10 controller system, analyzes their impact on financial reporting, and defines specific control measures to mitigate these risks, with regular reviews and updates. Explanation. The scenario presents a common challenge in financial reporting and risk management, balancing the need for timely and accurate financial data with the inherent risks of data integrity and system vulnerabilities within an IBM Cognos 10 controller environment. The professional challenge lies in identifying and mitigating potential risks that could compromise the reliability of financial statements, which are critical for regulatory compliance and stakeholder trust. This requires a proactive and systematic approach to risk assessment, ensuring that controls are adequate and that potential issues are addressed before they impact financial reporting. The correct approach emphasizes a comprehensive and documented risk assessment process that directly informs the design and implementation of controls within the Cognos 10 controller system. This aligns with best professional practices by ensuring that risks are identified, analyzed, and treated in a structured manner. Specifically, it promotes a proactive stance, where potential issues are anticipated and mitigated, thereby enhancing the accuracy and reliability of financial data. This approach is ethically sound as it prioritizes the integrity of financial reporting, a fundamental responsibility of developers and financial professionals. It also implicitly supports regulatory compliance by aiming to prevent misstatements and ensure adherence to reporting standards. An incorrect approach that focuses solely on technical performance metrics without considering the underlying data integrity risks is professionally unacceptable. This failure stems from a narrow view that overlooks the potential for data manipulation, unauthorized access, or system errors to impact financial reporting accuracy, even if the system is performing technically well. Such an approach could lead to regulatory breaches if it results in inaccurate financial statements being published, violating principles of fair presentation and transparency. Another incorrect approach that relies on anecdotal evidence or past experience without a formal, documented risk assessment process is also professionally deficient. This method is subjective and lacks the rigor required for effective risk management. It fails to provide a systematic basis for identifying all relevant risks and may miss critical vulnerabilities. Ethically, it demonstrates a lack of due diligence and could expose the organization to significant financial and reputational damage if unforeseen risks materialize. Regulatory bodies expect a structured and auditable approach to risk management, which this method fails to provide. Finally, an approach that prioritizes immediate user requests over a thorough risk assessment, even if those requests seem minor, is problematic. While user satisfaction is important, it should not come at the expense of robust risk management. Ignoring potential risks associated with seemingly small changes can lead to unforeseen consequences and compromise the overall integrity of the system and its financial outputs. This can result in regulatory noncompliance and ethical lapses by failing to uphold the duty of care to ensure the reliability of financial information. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should include identifying potential risks, e.g., data integrity, security, operational, analyzing the likelihood and impact of these risks, evaluating existing controls, and determining appropriate mitigation strategies. This process should be documented and regularly reviewed, ensuring that it remains relevant and effective in the context of the evolving business and regulatory environment. Professionals must prioritize a risk-based approach, ensuring that resources are allocated to address the most significant threats to financial reporting accuracy and compliance. Question 12. Comparative studies suggest that effective risk assessment in complex software development projects, such as those involving IBM Cognos 10 controller, is a critical determinant of success. Considering the iterative nature of development and the potential for unforeseen issues, which of the following approaches to risk assessment is most likely to lead to robust project outcomes and adherence to best practices? Option A. An approach that mandates the creation of detailed risk registers for every conceivable minor issue, requiring extensive sign-offs before any development work can commence. Option B. A process where the lead developer relies primarily on their personal experience and intuition to identify and assess potential risks, documenting only those that seem immediately critical. Option C. A collaborative approach involving key stakeholders to identify, analyze, and prioritize risks, leveraging both historical data and expert judgment, with a focus on developing actionable mitigation plans that are regularly reviewed. Option D. A methodology that exclusively quantifies risks using statistical models, disregarding any qualitative factors that cannot be easily assigned a numerical value. The correct answer is C. A collaborative approach involving key stakeholders to identify, analyze, and prioritize risks, leveraging both historical data and expert judgment, with a focus on developing actionable mitigation plans that are regularly reviewed. Explanation. This scenario presents a professional challenge due to the inherent subjectivity and potential for bias in risk assessment, particularly when dealing with qualitative factors that are crucial in IBM Cognos 10 controller development. The developer must balance the need for thorough risk identification with the practical constraints of project timelines and resources. Careful judgment is required to ensure that the risk assessment is comprehensive, actionable, and aligned with the project's objectives and the organization's risk appetite, without becoming an overly burdensome process. The correct approach represents best professional practice because it involves a structured, collaborative, and iterative process for risk assessment. By engaging stakeholders, leveraging historical data, and focusing on the likelihood and impact of identified risks, the developer ensures that the assessment is grounded in reality and actionable. This aligns with general principles of good project management and IT governance, which emphasize proactive risk management to safeguard project success and data integrity. While specific regulations for IBM Cognos 10 controller development are not explicitly detailed in the exam syllabus for this topic, the approach adheres to the overarching principles of due diligence and responsible development expected in any professional IT context. An incorrect approach that relies solely on the developer's personal intuition or experience without broader consultation fails to capture the full spectrum of potential risks. This can lead to overlooking critical vulnerabilities or misjudging their significance, potentially resulting in project delays, budget overruns, or security breaches. Ethically, this approach demonstrates a lack of due diligence and a failure to adequately protect the organization's interests. Another incorrect approach that focuses exclusively on quantifiable risks, ignoring qualitative factors like user adoption or regulatory compliance changes, provides an incomplete picture. This can lead to a false sense of security, as significant risks that are harder to measure may be underestimated or entirely missed. This approach also risks noncompliance with broader organizational policies or industry best practices that mandate consideration of all risk types. A third incorrect approach that involves an overly complex and bureaucratic risk assessment process, requiring extensive documentation for every minor potential risk, is inefficient and can stifle innovation and agility. While thoroughness is important, an impractical process can lead to project paralysis and a reluctance to engage with risk management, ultimately undermining its purpose. This approach fails to strike a balance between rigor and practicality, hindering effective risk mitigation. The professional decision-making process for similar situations should involve 1. Understanding the project context and objectives. 2. Identifying potential risk categories relevant to IBM Cognos 10 controller development, e.g., technical, operational, security, compliance, user-related. 3. Engaging a diverse group of stakeholders, e.g., business users, IT operations, security teams, to gather input. 4. Employing a mix of qualitative and quantitative assessment techniques. 5. Prioritizing risks based on likelihood and impact. 6. Developing clear mitigation strategies and assigning ownership. 7. Regularly reviewing and updating the risk assessment throughout the project lifecycle. Question 13. Market research demonstrates that a new data enrichment service, integrated with IBM Cognos 10 controller, could significantly improve the accuracy of financial reporting. However, the service's underlying algorithms are proprietary and not fully disclosed. When assessing the risks associated with using this service for financial data, which approach best aligns with regulatory compliance and professional integrity? Option A. Rely solely on the vendor's provided documentation and assurances regarding the service's accuracy and compliance, assuming their internal processes meet all necessary regulatory standards. Option B. Implement the service after a brief review of the vendor's marketing materials, assuming that any regulatory concerns will be addressed by the vendor's legal team if they arise. Option C. Conduct a comprehensive internal risk assessment, documenting the potential impact of the service's data on financial reports, and consult with internal audit and compliance teams to validate the assessment and proposed controls before implementation. Option D. Proceed with integrating the service immediately to leverage its perceived benefits, deferring any formal risk assessment until after the initial reporting cycle to address any issues that arise. Correct answer is C. Conduct a comprehensive internal risk assessment, documenting the potential impact of the service's data on financial reports, and consult with internal audit and compliance teams to validate the assessment and proposed controls before implementation. Explanation. This scenario presents a common challenge in financial reporting and risk management, where the interpretation and application of regulatory requirements can be subjective, especially when dealing with emerging technologies. The professional challenge lies in balancing the need for accurate and compliant financial reporting with the adoption of innovative solutions that may not have established regulatory precedents. Careful judgment is required to ensure that the chosen risk assessment approach aligns with the spirit and letter of the applicable regulations, specifically those governing financial data integrity and reporting within the IBM Cognos 10 controller developer context. The correct approach represents best professional practice because it prioritizes a thorough, documented, and compliant methodology for risk assessment. By engaging with internal audit and compliance teams, the developer ensures that the risk assessment process is not only technically sound, but also adheres to the established governance frameworks and regulatory expectations. This proactive engagement mitigates the risk of non-compliance and demonstrates a commitment to responsible development and reporting, aligning with the principles of data accuracy and regulatory adherence expected in financial systems. An incorrect approach that relies solely on vendor documentation without independent validation fails to meet professional standards. This is because vendor documentation, while informative, may not fully address the specific implementation context or the nuances of the regulatory environment. It can lead to a superficial understanding of risks and a failure to identify potential vulnerabilities or misinterpretations of regulatory requirements. This could result in reporting inaccuracies or breaches of compliance, which are serious ethical and regulatory failures. Another incorrect approach that bypasses established internal review processes is equally problematic. This bypasses critical oversight mechanisms designed to ensure adherence to regulatory mandates and internal controls. It suggests a disregard for established governance and can lead to the implementation of solutions that, while potentially functional, may not be compliant or may introduce unforeseen risks. This lack of due diligence is a significant professional and ethical failing, as it undermines the integrity of the financial reporting system and the organization's compliance posture. The professional decision-making process for similar situations should involve a structured risk assessment framework that includes understanding the regulatory landscape, identifying potential risks specific to the technology and its application, evaluating the likelihood and impact of these risks, and developing appropriate mitigation strategies. Crucially, this process must involve collaboration with relevant stakeholders, including compliance, legal, and internal audit departments, to ensure that the assessment and proposed solutions are robust, compliant, and aligned with organizational objectives and regulatory expectations. Question 14. To address the challenge of rapidly deploying a critical configuration update to IBM Cognos 10 controller that impacts core financial reporting logic, which approach best balances the need for speed with the imperative of system stability and data integrity? Option A. Apply the update to a development environment and perform unit testing only, assuming that the fix is isolated and will not affect other modules. Option B. Implement the update in a dedicated user acceptance testing (UAT) environment, conduct comprehensive regression testing and performance checks, and then follow a formal change control process for production deployment. Option C. Document the proposed changes thoroughly and await a scheduled maintenance window for deployment, even if the issue is time-sensitive and impacting users. Option D. Deploy the update directly to the production environment after a brief, informal review by a senior developer, prioritizing immediate availability of the fix. The correct answer is D. Deploy the update directly to the production environment after a brief, informal review by a senior developer, prioritizing immediate availability of the fix. Explanation. This scenario presents a professional challenge due to the inherent tension between achieving project deadlines and ensuring the integrity and maintainability of the IBM Cognos 10 controller solution. Developers are often pressured to deliver features quickly, which can lead to shortcuts that compromise best practices. The need for a robust, scalable, and auditable financial reporting system, as implied by the use of IBM Cognos controller, necessitates adherence to established development and deployment protocols. Failure to do so can result in significant downstream issues, including data inaccuracies, performance degradation, increased maintenance costs, and potential non-compliance with internal governance or external regulations if the financial data is subject to such scrutiny. The correct approach represents best professional practice because it prioritizes a structured and controlled development lifecycle. Implementing a formal change management process, including thorough testing in a dedicated UAT environment before deployment to production, ensures that new configurations or code changes are validated for functionality, performance, and impact on existing processes. This aligns with principles of good IT governance and risk management, aiming to minimize disruption and maintain the reliability of the financial reporting system. It also facilitates traceability and accountability, crucial for audit trails and future troubleshooting. An incorrect approach that bypasses formal testing and deploys directly to production, even with the intention of quick fixes, represents a significant regulatory and ethical failure. It introduces an unacceptable level of risk to the accuracy and availability of financial data. This could lead to reporting errors, which, depending on the industry and jurisdiction, may have legal and financial repercussions. It also undermines the principle of due diligence in system management. Another incorrect approach, focusing solely on the immediate functional requirement without considering broader system impact or documentation, demonstrates a lack of foresight and professional responsibility. This can lead to technical debt, making future modifications more complex and error-prone, and hindering knowledge transfer within the development team. A third incorrect approach, relying on informal peer review without a structured testing phase, may catch some errors but lacks the rigor of a dedicated testing environment and comprehensive test cases, thus failing to adequately mitigate risks. The professional decision-making process for similar situations should involve a risk-based assessment. Developers and project managers must weigh the urgency of a change against the potential impact of its failure. This includes understanding the criticality of the affected system, in this case, financial reporting, the potential consequences of errors, financial misstatements, regulatory penalties, and the effectiveness of proposed mitigation strategies. Adhering to established development methodologies, change control procedures, and a commitment to thorough testing are paramount. When faced with pressure to deviate, professionals should clearly articulate the risks associated with such deviations and advocate for adherence to best practices, escalating concerns if necessary. Question 15. Stakeholder feedback indicates a strong desire to rapidly deploy a new reporting module within IBM Cognos 10 controller to meet an urgent business need. However, the development team has identified potential risks to data integrity and audit trail completeness if the module is implemented without a full regression testing cycle and a formal change control review. What is the most appropriate course of action to balance stakeholder urgency with professional best practices and regulatory compliance? Option A. Reject the immediate deployment request and insist on a full, standard development lifecycle, including comprehensive testing and formal review before any part of the module can be deployed, regardless of the business urgency. Option B. Prioritize the immediate deployment of a limited, core set of the new reporting module's functionalities that have been quickly validated, with a plan to iteratively deploy the remaining features and conduct full testing and reviews in subsequent phases. Option C. Develop a workaround solution using existing functionalities within IBM Cognos 10 controller that can be deployed immediately, while the new module undergoes the full standard development lifecycle. Option D. Implement the new reporting module immediately to satisfy the urgent business need, deferring comprehensive testing and formal review until after deployment, with a commitment to address any issues that arise. The correct answer is D. Implement the new reporting module immediately to satisfy the urgent business need, deferring comprehensive testing and formal review until after deployment, with a commitment to address any issues that arise. Explanation. This scenario presents a common challenge in enterprise software development, balancing the desire for immediate feature delivery with the need for robust, maintainable, and compliant solutions. The professional challenge lies in navigating conflicting stakeholder priorities, where business units may push for rapid deployment of new functionalities without fully appreciating the downstream implications on data integrity, auditability, and regulatory adherence, which are paramount in financial reporting contexts like those managed by IBM Cognos Controller. The correct approach, which involves a phased implementation with thorough testing and validation against regulatory requirements, represents best professional practice because it prioritizes data integrity and compliance. IBM Cognos Controller is a financial consolidation and reporting tool, and its outputs are subject to stringent regulatory scrutiny. Adhering to a structured development lifecycle ensures that any new features or modifications are rigorously tested for accuracy, security, and compliance with relevant financial regulations, e.g., IFRS, GAAP, or specific local reporting standards applicable within the exam's implied jurisdiction, which is assumed to be a general financial services context without specific country mandates unless otherwise stated. This methodical approach minimizes the risk of errors, misstatements, and non-compliance, thereby protecting the organization from financial penalties and reputational damage. An incorrect approach that bypasses formal testing and validation processes, or prioritizes speed over adherence to established data governance policies, poses significant regulatory and ethical failures. Specifically, it risks introducing data inaccuracies that could lead to fraudulent financial reporting, a severe ethical and legal breach. Furthermore, it undermines the audit trail and control mechanisms inherent in financial systems, making it difficult to demonstrate compliance during regulatory audits. Such shortcuts can also lead to system instability and increased technical debt, ultimately hindering future development and increasing long-term costs. The professional decision-making process in such situations should involve 1. Understanding and documenting all stakeholder requirements, clearly distinguishing between business needs and technical/regulatory constraints. 2. Assessing the impact of each requirement on data integrity, security, and compliance. 3. Prioritizing tasks based on risk, regulatory impact, and business value. advocating for a phased approach that allows for continuous validation. 4. Communicating transparently with stakeholders about the risks and benefits of different implementation strategies, emphasizing the importance of compliance and data accuracy. 5. Adhering strictly to established development methodologies and change control procedures, ensuring all changes are documented, tested, and approved. Question 16. Risk assessment procedures indicate that the data transformation logic within IBM Cognos 10 controller is a critical area for ensuring financial data integrity. Which of the following approaches best mitigates the risk of data misstatement and ensures regulatory compliance? Option A. Relying on ad hoc manual adjustments to data during the transformation process, with minimal documentation of the rationale behind these changes. Option B. Implementing a comprehensive documented process for data mapping, transformation rules, and automated validation checks, with a clear audit trail for all changes. Option C. Prioritizing the speed of report generation by minimizing the time spent on data validation and reconciliation steps. Option D. Focusing exclusively on the technical accuracy of data transformation scripts, without verifying their impact on the overall financial reporting context. The correct answer is B. Implementing a comprehensive, documented process for data mapping, transformation rules, and automated validation checks, with a clear audit trail for all changes. Explanation. Scenario analysis. This scenario presents a professional challenge in ensuring data integrity and compliance within an IBM Cognos 10 controller environment. The core difficulty lies in balancing the need for efficient data processing and reporting with the imperative to maintain accurate and auditable financial records. Developers must navigate the complexities of data transformation and aggregation, understanding that any deviation from established best practices can lead to misstatements, regulatory scrutiny, and erosion of stakeholder trust. The pressure to deliver timely reports can sometimes conflict with the meticulous nature of data validation, requiring a disciplined approach to development and testing. Correct approach analysis. The correct approach emphasizes a systematic and documented process for data transformation and validation within Cognos controller. This aligns with best professional practices by ensuring that all data manipulations are traceable, repeatable, and subject to review. By establishing clear data mapping rules, implementing automated validation checks at key stages, and maintaining comprehensive audit trails, developers create a robust system that minimizes the risk of errors. This proactive stance is crucial for regulatory compliance, as it provides evidence of due diligence in maintaining the accuracy and integrity of financial data. The emphasis on documentation also supports future maintenance, troubleshooting, and audits, reinforcing the principle of accountability. Incorrect approaches analysis. An approach that relies on ad hoc adjustments and manual overrides without proper documentation introduces significant risk. This bypasses established control mechanisms, making it impossible to trace the origin of data changes or to verify their accuracy. Such practices are ethically questionable as they undermine transparency and can lead to deliberate or inadvertent misrepresentation of financial information, violating principles of professional integrity. From a regulatory standpoint, this lack of auditability makes it difficult to satisfy compliance requirements, potentially leading to penalties. Another incorrect approach involves prioritizing speed of report generation over thorough data validation. While efficiency is important, it should not come at the expense of accuracy. Skipping validation steps or performing them superficially can result in reports based on flawed data. This is a direct contravention of professional responsibility to ensure the reliability of financial information. Ethically, it demonstrates a lack of commitment to accuracy, and regulators would view this as a failure to exercise due care, potentially leading to sanctions. A third incorrect approach that focuses solely on the technical implementation of data transformations without considering the business context or the impact on downstream reporting is also problematic. Data transformations must be understood in terms of their financial implications. Without this broader perspective, developers might implement technically correct but financially misleading transformations. This demonstrates a failure to grasp the full scope of their responsibilities, which extends beyond mere coding to ensuring the business relevance and accuracy of the data presented. This can lead to misinterpretations by stakeholders and, consequently, poor business decisions, which is an ethical and professional failing. Professional reasoning. professionals should adopt a risk-based approach to development, prioritizing data integrity and compliance. This involves understanding the regulatory landscape relevant to financial reporting and embedding controls within the development lifecycle. A decision-making framework should include 1. Thoroughly understanding business requirements and their financial implications. 2. Designing data transformations with clear, documented logic. 3. Implementing automated validation checks at critical junctures. 4. Maintaining comprehensive audit trails for all data modifications. 5. Regularly reviewing and testing the system to ensure ongoing accuracy and compliance. This structured approach fosters accountability, transparency, and ultimately, the reliability of financial reporting. Question 17. Cost-benefit analysis shows that a proposed enhancement to the IBM Cognos 10 controller system offers significant potential for improved reporting efficiency, but requires a substantial upfront investment and carries a moderate risk of integration challenges. What is the most professionally responsible approach to evaluating and implementing this enhancement? Option A. Proceed with the full development and deployment of the enhancement based on the positive feedback from the IT department's technical feasibility study, without further business validation. Option B. Reject the enhancement outright due to the high upfront cost, focusing instead on optimizing existing reporting processes within the current IBM Cognos 10 controller configuration. Option C. Immediately deploy the enhancement across all departments to realize the potential efficiency gains as quickly as possible, assuming the benefits will outweigh any initial disruptions. Option D. Implement the enhancement in a phased approach, starting with a pilot program in a controlled environment, defining clear key performance indicators, KPI for success, and establishing a rollback plan. The correct answer is D. Implement the enhancement in a phased approach, starting with a pilot program in a controlled environment, defining clear key performance indicators, KPI for success, and establishing a rollback plan. Explanation: scenario analysis. This scenario presents a common challenge in enterprise software development where a new feature, while technically feasible and potentially beneficial, requires significant upfront investment and carries inherent risks. The challenge lies in balancing the potential long-term gains against the immediate costs and the possibility of the feature not delivering the expected value or encountering unforeseen integration issues within the IBM Cognos 10 controller environment. The developer must critically evaluate the proposed solution's alignment with business objectives and its impact on existing processes and infrastructure, adhering to the principles of responsible technology adoption. Correct approach analysis. The correct approach prioritizes a phased implementation with clear, measurable success criteria and a robust rollback strategy. This aligns with best practices in software development and project management, particularly within regulated environments where auditability and risk mitigation are paramount. By starting with a pilot program and defining specific KPIs, the developer ensures that the value proposition of the new feature is validated before a full-scale deployment. This approach minimizes disruption, allows for iterative refinement, and provides concrete data to justify further investment or to pivot if necessary. It also demonstrates due diligence in managing resources and mitigating potential negative impacts on the controller system's stability and performance, which is crucial for maintaining operational integrity. Incorrect approaches analysis. One incorrect approach involves immediate full-scale deployment without prior testing or a pilot phase. This represents a significant regulatory and ethical failure by disregarding the principle of prudent risk management. It exposes the organization to substantial operational disruption, data integrity issues, and potential noncompliance if the feature negatively impacts financial reporting processes. Such an approach demonstrates a lack of professional responsibility in safeguarding the integrity of the financial data managed by IBM Cognos 10 controller. Another incorrect approach is to abandon the feature entirely due to the initial cost, without a thorough evaluation of potential long-term benefits or alternative, more cost-effective implementation strategies. This can be considered a failure in professional judgment and strategic thinking. It may lead to missed opportunities for efficiency gains or competitive advantage, potentially impacting the organization's ability to meet evolving business needs. While cost is a factor, A complete dismissal without exploring all viable options is not a best practice. A third incorrect approach is to proceed with development based solely on the technical feasibility and the enthusiasm of a single stakeholder, without a comprehensive business case or alignment with broader organizational goals. This neglects the critical requirement for solutions to serve a defined business purpose and deliver tangible value. Ethically, it represents a misuse of resources and a failure to act in the best interest of the organization. It also increases the risk of the feature becoming an underutilized or redundant component, which is poor stewardship of IT investments. Professional reasoning. Professionals should adopt a structured decision-making process that begins with a clear understanding of the business problem or opportunity. This involves defining objectives, identifying potential solutions, and conducting a thorough risk assessment for each. A cost-benefit analysis, as indicated, is a starting point, but it must be complemented by an evaluation of implementation feasibility, potential impact on existing systems, and alignment with strategic goals. For technology projects, a phased approach with defined milestones, pilot testing, and clear success metrics is essential for managing risk and ensuring value realization. Professionals must also consider the long-term implications, including maintenance, scalability, and potential obsolescence, and always maintain a focus on data integrity and regulatory compliance within the specific context of the IBM Cognos 10 controller environment. Question 18. Consider a scenario where a developer is tasked with configuring data input forms with an IBM Cognos 10 controller to capture financial data from various subsidiaries. The primary objective is to ensure the accuracy and consistency of this data before it is consolidated. Which of the following approaches best adheres to professional best practices for data integrity and system maintainability within this context? Option A. Bypass detailed data validation during the input phase, assuming that any significant errors will be identified and rectified during the subsequent consolidation and reporting stages. Option B. Implement basic data type checks only, such as ensuring a field accepts numerical input without enforcing specific business rules or interdependencies. Option C. Implement comprehensive data validation rules directly within the Cognos controller input forms, leveraging the system's built-in validation capabilities to enforce data types, ranges, and interdependencies based on predefined business logic. Option D. Rely primarily on end users to manually review and correct any data entry errors after the data has been submitted to the system, assuming they will exercise due diligence. The correct answer is C. Implement comprehensive data validation rules directly within the Cognos controller input forms, leveraging the system's built-in validation capabilities to enforce data types, ranges, and interdependencies based on predefined business logic. Explanation. This scenario presents a professional challenge due to the inherent tension between delivering a functional solution and adhering to established best practices for data integrity and system maintainability within the IBM Cognos 10 controller developer framework. The developer must balance immediate project demands with long-term system health and compliance. The correct approach represents best professional practice because it prioritizes data accuracy and auditability, which are fundamental to financial reporting and regulatory compliance. By implementing a robust validation process within the Cognos controller framework, the developer ensures that data entered is consistent and adheres to predefined business rules. This proactive measure minimizes the risk of erroneous financial statements, reduces the need for costly post-processing corrections, and aligns with the principle of garbage in, garbage out by preventing the introduction of flawed data. Furthermore, documenting these validation rules enhances transparency and facilitates future system maintenance and audits, aligning with principles of good governance and responsible system development. An incorrect approach that bypasses or inadequately implements data validation mechanisms introduces significant regulatory and ethical risks. Failing to validate data at the point of entry can lead to the propagation of errors throughout financial reports. This directly contravenes the ethical obligation to ensure the accuracy and reliability of financial information, which is paramount in regulated environments. From a regulatory perspective, inaccurate financial data can result in non-compliance with reporting standards, potentially leading to penalties, reputational damage, and legal repercussions. Such an approach also undermines the principle of professional due care as it demonstrates a disregard for the potential consequences of data inaccuracies. Another incorrect approach, such as relying solely on end-user manual checks without system-level enforcement, is also professionally unacceptable. While end-user diligence is important, it is inherently fallible and prone to human error. Relying on it exclusively creates a weak control environment, increasing the likelihood of undetected errors. This failure to implement robust system controls is a breach of professional responsibility, as it does not provide adequate assurance of data integrity. Ethically, it places an undue burden on individuals and fails to leverage the capabilities of the system to enforce accuracy. The professional decision-making process for similar situations should involve a thorough risk assessment of potential data inaccuracies and their impact. This includes understanding the specific business rules and financial reporting requirements relevant to the organization. The developer should then evaluate the available tools and functionalities within the IBM Cognos 10 controller framework to implement the most effective and efficient validation mechanisms. Prioritizing solutions that embed validation directly into data entry processes, rather than relying on post hoc corrections, is a key aspect of this decision-making. Furthermore, consulting with stakeholders, including finance and compliance teams, to confirm the adequacy of validation rules and processes is crucial for ensuring alignment with business needs and regulatory expectations. Question 19. The investigation demonstrates that a critical financial reporting cycle is approaching, and the IBM Cognos 10 controller developer team has identified discrepancies in the intercompany elimination process for a newly acquired subsidiary. The team suspects that the configuration of the consolidation rules within Cognos controller may not be fully aligned with the specific accounting treatments required for the subsidiary's unique transaction types, leading to potential misstatements in the consolidated financial statements. The primary goal is to ensure the accuracy and compliance of the upcoming financial reports. What is the most appropriate course of action for the IBM Cognos 10 controller developer team to address this implementation challenge? Option A. Immediately adjust the consolidation rules in Cognos controller based on the team's initial understanding of the discrepancies and proceed with the reporting cycle, planning to conduct a full review post-reporting. Option B. Rely on manual adjustments in the final reporting phase to correct any identified intercompany elimination errors, assuming the core Cognos controller configuration is fundamentally sound. Option C. Halt the reporting cycle. Conduct a detailed root cause analysis of the intercompany elimination discrepancies, involving both the technical team and the finance/accounting department, and reconfigure Cognos controller based on validated accounting principles and source data verification before proceeding. Option D. Proceed with the reporting cycle using the current Cognos controller configuration, assuming the discrepancies are minor and will be addressed in a future system update, and focus on generating the reports by the deadline. The correct answer is A. Immediately adjust the consolidation rules in Cognos controller based on the team's initial understanding of the discrepancies and proceed with the reporting cycle, planning to conduct a full review post-reporting. Explanation. The investigation demonstrates a common implementation challenge in IBM Cognos 10 controller developer related to data integrity and reporting accuracy when dealing with complex financial structures and intercompany eliminations. The challenge lies in ensuring that the underlying data model and the configuration of the consolidation process accurately reflect the business's financial reality, especially when multiple entities and intercompany transactions are involved. This requires a deep understanding of both the technical capabilities of Cognos controller and the specific accounting principles and regulatory reporting requirements applicable to the organization. The correct approach represents best professional practice because it prioritizes a thorough, systematic, and documented validation process. This involves not only technical testing of the Cognos controller configuration, but also a comprehensive review of the financial data against source systems and accounting standards. This methodical approach minimizes the risk of reporting errors, ensures compliance with financial regulations, such as those governing financial statement accuracy and disclosure, and builds confidence in the integrity of the financial reports generated by the system. It aligns with professional ethics that demand diligence, accuracy, and accountability in financial reporting. An incorrect approach that focuses solely on the technical configuration without validating the underlying data against source systems and accounting principles would be professionally unacceptable. This failure would violate the ethical obligation to ensure the accuracy and reliability of financial information. It could lead to material misstatements in financial reports, potentially breaching regulatory requirements for financial reporting accuracy and leading to significant financial and reputational damage. Another incorrect approach that bypasses formal testing and validation in favor of ad hoc adjustments during the reporting cycle is also professionally unsound. This practice undermines the integrity of the system and the audit trail. It introduces a high risk of inconsistent application of accounting policies and can obscure the root cause of data discrepancies, making it difficult to identify and rectify systemic issues. This lack of a structured, auditable process is a direct contravention of professional standards for financial system implementation and maintenance. A further incorrect approach that relies on assumptions about data accuracy without independent verification is equally problematic. Professional practice demands that assumptions be rigorously tested and validated. Relying on unverified assumptions can lead to the perpetuation of errors, making the financial reports unreliable and potentially non-compliant with regulatory mandates for accurate financial representation. The professional decision-making process for such situations should involve a phased approach. 1. Understand the business requirements and regulatory reporting obligations thoroughly. 2. Design the Cognos controller solution to meet these requirements, considering data flow, consolidation rules, and intercompany eliminations. 3. Develop a comprehensive testing strategy that includes unit testing, integration testing, and user acceptance testing, with a strong emphasis on data validation against source systems and accounting principles. 4. Document all configurations, testing procedures, and validation results meticulously. 5. Obtain sign-off from relevant stakeholders, including finance and accounting teams, before deploying the solution. 6. Establish ongoing monitoring and review processes to ensure continued data integrity and system performance. Question 20. Upon reviewing the data loading process for a new financial reporting cycle in IBM Cognos 10 controller, it has been identified that the current validation steps primarily focus on ensuring the data can be imported without technical errors, rather than verifying its financial accuracy against source systems. What is the most appropriate approach to enhance data integrity and ensure compliance with financial reporting standards? Option A. Focus solely on optimizing the speed of the data import process, assuming that any errors will be minor and self-correcting over time. Option B. Implement a comprehensive validation strategy that includes preload checks on source data, post-load reconciliation against source system totals, and the configuration of automated validation rules within controller. Option C. Increase the frequency of manual data sampling after the load to identify potential errors, without altering the existing import validation. Option D. Rely on the audit team to identify any significant data discrepancies during their year-end review. The correct answer is B. Implement a comprehensive validation strategy that includes preload checks on source data, post-load reconciliation against source system totals, and the configuration of automated validation rules within controller. Explanation. Scenario analysis. This scenario presents a common implementation challenge in IBM Cognos 10 controller, where data integrity and reporting accuracy are paramount. The challenge lies in balancing the need for timely financial reporting with the potential for errors introduced during the data loading process from disparate source systems. Ensuring that the data loaded into controller accurately reflects the underlying financial transactions is critical for regulatory compliance and informed business decision-making. The complexity arises from the variety of data sources, potential for manual intervention, and the need for robust validation before final reporting. Correct approach analysis. The correct approach involves a multi-layered validation strategy. This begins with preload validation of source data to identify and rectify errors at the earliest stage. Subsequently, post-load reconciliation within controller, comparing aggregated figures against source system totals or predefined control totals, is essential. Implementing automated validation rules within controller, such as checking for expected account balances or transaction types, further strengthens data integrity. This comprehensive approach ensures that data is not only loaded, but also verified for accuracy and completeness, aligning with the principles of reliable financial reporting and internal control frameworks. This aligns with the implicit regulatory expectation of due diligence in financial data management. Incorrect approach is analysis. Relying solely on post-load reconciliation without pre-load validation is a significant regulatory and ethical failure. It means that errors may be loaded into the system, potentially leading to inaccurate financial statements. This increases the risk of misrepresenting the financial position of the organization, which can have severe consequences for stakeholders and regulatory bodies. It demonstrates a lack of proactive risk management. Accepting data loads without any form of reconciliation or validation is a direct contravention of sound financial practices and regulatory expectations. This approach introduces an unacceptable level of risk, as there is no assurance that the data in controller is accurate or complete. It can lead to material misstatements in financial reports, potentially violating reporting standards and leading to regulatory penalties. Implementing only automated validation rules within controller without verifying the source data or performing reconciliation is also insufficient. While automated rules can catch some internal inconsistencies, they cannot identify errors that originate in the source systems and are simply passed through. This approach creates a false sense of security and fails to address the root cause of potential data inaccuracies. Professional reasoning. Professionals must adopt a proactive and systematic approach to data integrity. This involves understanding the data flow from source to report, identifying potential points of failure, and implementing appropriate controls at each stage. A robust data validation strategy should include 1. Understanding source data, thoroughly understanding the structure, content, and potential limitations of all source data. 2. Preload validation, implementing checks and balances on source data before it is loaded into controller. 3. Controlled loading, utilizing documented and tested data loading procedures. 4. Post-load reconciliation, performing detailed comparisons between loaded data in controller and source system figures or established control totals. 5. Automated validation rules, configuring and maintaining automated checks within controller to identify anomalies. 6. Regular audits, periodically reviewing the entire data loading and validation process to ensure its effectiveness. This structured approach ensures that financial data is reliable, accurate, and compliant with relevant reporting requirements.